So as we think about who we're going after for charitable gift annuities, probably the answer is just about everyone age 40 or above are suspects or prospects, because all it takes is $10,000 or more. And we're assuming that they love what your nonprofit is doing. We're assuming that they've been cultivated. Maybe they've come to some of your special events. And let's look at what else might make them most appropriate. They probably figure that your charity, as we talked about earlier, is trustworthy because you're going to be responsible. Even if you sub it out to another community foundation or faith-based foundation, you're still responsible ultimately. Could be secondarily liable, but you're still responsible for making sure that everything appropriate happens on paying out those gift annuity payments. Charitable gift annuity, again, is a simple 1- or 2-page contract. We'll look at one in a second. So it's easy for anyone to understand. The payments are backed by all of your assets, not just the assets given that are placed in a trust, because this is not a trust. So if you've got an endowment of $100 million, your entire $100 million endowment backs up these income payments. Fixed dollar amount depends upon the age of the donor at the time of the gift, remains constant for life. And also in your book is the website for the American Council on Gift Annuities, not to be confused with the American Corn Growers Association. This is -web.org. 95+% of all charities offer the same rates of return, those recommended by the actuaries. Now, how do we know what rates of return to offer? Probably American Council on Gift Annuities rates, but occasionally in the Sunday New York Times, for example, you'll find where Pomona College in California, who offers the Pomona Plan, thanks to the alliteration. The Pomona Plan is essentially charitable gift annuities. They'll offer a slightly higher rate of return than what the American Council on Gift Annuities is offering. So they'll be bringing in money from folks who could care less about Pomona College because they're offering maybe 2% more. I believe it's the Jewish Federation in New York City offers a little bit more too. Now, you may have a boss or bosses, your board of trustees, who say, we're not going to go up to a 9% return. Can we offer a lower rate of return? The answer is yes. Again, you're not forced to offer these rates of return. Now, what I like to suggest to a lot of organizations is offer the American Council on Gift Annuities rate, but give the donor the option. If the rate seems high to you, say, you know, we really never want to encroach upon your gift because we're serving these orphans and spiritual orphans and the like. If you're willing to accept a slightly lower rate of return, that's going to increase your income tax charitable deduction. And especially with faith-based organizations, that works about 1/3 to 1/2 the time. People say, yeah, I never want you to have to encroach upon the principle of my gift that I give to you. So yeah, just give me a 6 or 7% return rather than a 9% return. But you've got to know your donor there, and you've got to make sure that doesn't turn them off.
Is the PG Calc rate and the ACGA rate always going to be the same?
Yes. Yeah, now PG Calc, Crescendo, any of the software providers, they will give you other rates of return that are optional preferences. You could go back to an earlier rate of return, or you could plug in your own rates of return, but that's kind of in the advanced options or preferences screen of PG Calc. So yeah, the default would be the American Council on Gift Annuities rates. Okay, charitable gift annuities. Here are the rates of return. They're in your book. Again, the older the person, the higher the rate of return. Average person you're going after is about age 72, 73 for a charitable gift annuity. So most people are going to get a 5.4, 5.5% rate of return. And your nonprofit can probably handle an average of about 5.5% being paid out for life expectancy. Some people are going to live a long time, other people are going to live a shorter period of time. So actuarially speaking, it'd be nice to have a large pool of charitable gift annuity donors. The chart in your seminar manual gives the 2 life tables, and that is what, over a couple pages here. Page 66 maybe, or 65, yeah, 65, where you take the younger age and the older age and you see what the rate of return is for a 2-life situation. So if you have that happy couple age 75 and they want it for their joint lives, it's 5%. If you only paid it out for 1 life, it would be a slightly higher rate of return. But again, husband and wife, typically, you're going to be paying it out for husband and wife for their joint lives. A couple of other slides on charitable gift annuities. Just a recap of the tax benefits. Charitable deduction can be carried forward for up to 5 years. If it's appreciated property, you can go up to 30% of adjusted gross income, 50% for a gift of cash, just like the regular outright gift rules. The gift is going to be excluded from the estate tax, so even though it's paying out income and will be reported on the person's federal estate tax return at the time of death, you get a countervailing charitable deduction, so it goes into the estate and out of the estate for 0 federal estate tax. Avoids capital gains taxes to a certain extent because you're not paying a capital gains tax on the gift portion. You're only paying a capital gains tax on the investment or sale portion. The income benefits are obvious. It supplements the income if they're getting that 1/10 of 1% now from their money market account, and you can pay them 5 or 6%. Everyone wins except for the IRS. With the deferred payment gift annuity, income payments can be delayed until retirement. The donor can increase the payout rate over that of a current gift annuity by deferring the receipt of income. And of course, a current income tax deduction. That goes without saying, the philanthropic benefit is you are helping to build the assets at your organization. And gift annuities could be unrestricted or restricted in nature. But if they're restricted, again, don't make them too restricted. You know, maybe just say for endowment or endowment for children or endowment for the law school or something like that. You don't want too many restrictions in here again. Income tax charitable deduction. It's important to note, I think, that even though your board members are going to say these are high rates of return, donors can get a higher rate of return from a commercial insurance company. Could be just a couple of percentage points more, but they can get a higher rate of return by not doing a charitable gift annuity, but rather doing a commercial gift annuity. Now, with a commercial gift annuity, do you get a charitable deduction? No. So probably the effective rate of return is going to be higher for the person with the charitable gift annuity because of the additional income tax charitable contribution deduction. But they could get a higher rate of return in most cases from an insurance company. One option your not-for-profit has is reinsure the gift annuities through an insurance company. Now, what would happen there? You would place the burden of everything on the outside insurance company, and they may pay you 70 cents on the dollar, 75 cents on the dollar to take over that gift annuity obligation. The problem is, in most states, you are still secondarily liable. So if that insurance company goes belly up, the obligation falls back on you. Manhattan. So charitable gift annuities will appeal to just about everyone, I think, in your audience. And you really do need to focus on marketing of gift annuities. Here's what I recommend beyond the typical publication. We did this for the American Cancer Society a couple of years ago. We did a test mailing to 50,000 people in 5 different states for the American Cancer Society. 10,000 charitable gift annuity direct mail packets to Florida, 10,000 to Pennsylvania, 10,000 to some other states. And we even, get this, we even sent out 10,000 direct mail packets to another state to non-donors. We just sent it out to relatively affluent individuals, and we actually made money from non-donors. Again, because of the strong reputation the American Cancer Society has. So arguably, you could do this in your community, whatever your community is, if you have a strong reputation. We have found, for example, with certain children's homes, that by renting high net worth lists, you can bring in good money from other Presbyterians, Catholics, other denominations, just by renting a high net worth list. Don't assume that the money's got to come in from your own particular denomination. So how do we best market charitable gift annuities? What we learned at the American Council, at the American Cancer Society, is it was helpful to have the trust factor, obviously, but number 2, some name recognition. So signing the cover letter, where we talked about the 5 or 6 benefits of charitable gift annuity, kind of like what we looked at yesterday with President Jimmy Carter. We had one of their celebrities against cancer sign the letter. And in their particular case, it was John Forsythe, the actor, who was what, Charlie of Charlie's Angels and
Dynasty.
Dynasty. You may remember his first show in the 1950s. Okay, some of you weren't born then, that's okay. Bachelor Father, 1950s. I think black and white. When did color TV come about? Maybe 1965, 66, something like that. You had to turn it from green to purple to get the skin tones right and all that fun stuff. But John Forsythe got people to open the letter. You know, how do we, number one, how do we get people to open a letter on charitable gift annuities? It all depends on the outer, let's say, number 10 envelope, where you could go with a different size envelope. But if you say from the desk of John Forsythe, Hollywood, California, something like that. Now then, if you do that, you can't use the nonprofit rate for postage. You've got to use the regular rate, since it doesn't look like it's coming from a charity. So you are paying more in postage, but we found that that did work. What you could do maybe is work with somebody who's well known on your board and send it out from, let's say, their desk at Home Depot headquarters, if their corporate policy allows them to do that, or from the bank trust department, because everyone's going to open that bank trust department letter, because they're going to be thinking, okay, my Aunt Myrtle just died and maybe left me some money through the bank trust department. So get them to open the letter, consider having a celebrity or well-known person sign the letter.
A question, in the messaging, when you're sending it to non-donors, I mean, obviously people know the American Cancer Society, but if you're going to send it to non-donors and don't have that name recognition, but some people might know, like, heard of you, was the messaging different for the non-donors than the current existing donors?
Exact same message. We really only spent a paragraph talking about case for support.
Okay.
And the good work being done by the Cancer Society. So for the Shepherd Center, I think you could do the same thing. You know, you may want to target certain Buckhead zip codes, for example, see how that would go. Even in our work with Eagle Ranch, a children's home up in North Georgia, Eddie Staub, the founder of Eagle Ranch 25, 30 years ago, said, Calder, why would we want to mail to non-donors? And I said, Eddie, you've got a great recognition factor, great record at Eagle Ranch. And so we tried mailing to some of the Buckhead zip codes for Eagle Ranch, which is what, maybe 45 minutes or an hour away towards Chateau Alon winery and real estate development and all that. And we found that 30305, 30309, 30327 zip codes work quite well for Eddie Staub and Eagle Ranch. So you do have to test it to see what's going to work, what's not going to work. But the neat thing is, you're not asking for stupid little $100 gifts. You're asking for $10,000 or more. And then here's what makes the direct mail package even better. Rather than sending out an example just like the ones we looked at, you send out an example just like this, but it happens to be tailor-made for the recipient's age or ages. How do you do that? Well, you know in your database, hopefully, the actual age or approximate age of your donors. Or you sub that out to a mail house or Blackwater or somebody to get you that information. And so when Merle and Murtis open that letter and their age is 67 each, they look at the example and they say, you know, we're almost age 67. You know, don't personalize it for Merle and Murtis because you don't necessarily want them to think that you're stalking them and that you know that they're age 67. But the example, maybe you do it by every 5-year period of time. That's what we did for the American Cancer Society because we didn't have precise ages of many of their donors. So we said everyone ages 65 through 69 would get an example at age 67. We have a single life on the front side, we have the double life on the back side. Everyone ages 70 through 74, we get an example for somebody age 72. Now, luckily for us in the room, we did slightly better in those states where there were local plan giving representatives going around to help follow up on the direct mail packages. American Cancer has, what, about 15 representatives throughout the state of Florida. So luckily they proved their worth as fundraisers by bringing in more charitable gift annuities than in those states where it was just done by telephone.
Have you ever seen that tried at a college or university? Because it strikes me that if they don't have any affinity with Clarion or the W, that why do they care versus a Cancer Society, Heart Association?
Yeah, I would just go to my alumni.
Yeah.
Hopefully I've got plenty of alumni to do this direct mail package too. And then as part of the response device to this direct mail package, that is, you have the outer envelope that gets people to open up the inside. You've got the 1 or 2 page cover letter. You've got the example. You're probably going to also include a charitable gift annuity brochure, either one of ours or one of yours or somebody's, to give the rates of return. On the reply mechanism, you ask for the standard information, name, address, email address, best phone number, and then you say optional, approximate amount of gift being considered, and then in parentheses, $10,000 minimum. This way we can personalize an example for you if we know about how much you have in mind. It's kind of like when Gina goes to Tiffany's here at Phipps Plaza, and they don't know which counter to send her to, so they say, about how much did you have in mind? And so I'm not just kidding, Gina doesn't do that, but others may from time to time. How much money about did you have in mind? And so you're asking that in a nice, non-threatening way on the response form, $10,000 minimum. We were blown away by how many people wrote down $50,000, $100,000. One nice person just sent back with the reply form a check for $100,000. And, you know, he hadn't signed the agreement or anything like that yet, but just sent the check back for $100,000. He said, this looks good to me. And so we had to follow up. So
Quickly.
yes, quickly. And, you know, make sure you don't blow too much time and energy on those nice but kind of not so nice $100 annual fund gifts when you could redirect your time and energy and part of your budget to a charitable gift annuity mailing. Now again, if you're Clarion University, I wouldn't mail to people in the Pittsburgh area or anything like that. Yeah, you may get a 0.5% return if you're lucky, but you know, not worth it. I would start with my alumni.
Well, we
out.
have thousands and thousands, so.
Yeah. Yeah, so, you know, the job, if you're working at a university or in a healthcare institution or just about any not-for-profit, is to memorize the names of most of your top prospective donors. And if you're a university, their class years. And I did a lot of that at Emory. You know, I could tell you who was a member of the class of '63 business, and I would just memorize that information because then it gives you so much more to discuss when you go in and you say, well, was Bill Shropshire there at the time teaching economics or something like that? I made the mistake of going to an AFP conference at Emory a couple of years ago, and the foundations person, she did a great job talking about foundations and how Emory was raising money from private foundations. And I said, how involved are the faculty members? She had this blank look on her face, like, involve faculty members? She wasn't doing that because, you know, that would take extra time, but obviously a lot of times those faculty members retain the relationships over a period of decades. I was walking on the Emory campus recently, and my English professor from I'm dating myself, 1968, 69, said, Calder, is that still you? And
Yes.
he remembered me from 68, 69. And I said, I still remember reading The Flea by John Donne in your class. And so those relationships do matter. I hadn't seen one of my roommates at Emory in about 35 years. And we're walking into a McDonald's at about the same time, each to get our $1 large coffee or $1 large soft drink. And after 35 years, he recognized me, and he was in another part of Atlanta picking up his income tax return from the CPA, who just happened to be in my part of Atlanta. And he said, Calder, we have got to get together. And so those relationships, those alumni relationships, those faculty relationships, the physician relationships really matter. You know, why as a donor should I give to a fundraiser that I don't know, as opposed to maybe somebody I know? Emory had a great program raising money for scholarships a couple of years ago, so I was assigned 2 fundraisers at Emory to talk to me about a scholarship fund. And they knew I already had an endowed fund at Emory. They were trying to move me over to the scholarship fund. And in a nice way, after I believe some real grouper for lunch, I said, I'm just not interested in scholarships. Some people are, but I'm just not. You know, I'd rather give for something else. What did I get by email the next day? A request for scholarship money. And you know, these were 2 fundraisers, so maybe one misunderstood, but how could both misunderstand when I said, you know, I may add to my endowed fund, I may do this or that. You know, again, it's a people business. I hear we have a prospective plain giving donor out here. That's it quickly. Any attorneys in the room? Charitable gift annuities.
Can I ask you a question?
Yes, please.
What sort of follow-up would you have appreciated from those 2 fundraisers? When you said, I'm not interested in the scholarship fund, but obviously you're already invested, what would you have preferred them to do?
Probably send me a free necktie with the Emory logo on it, which I actually have. Maybe say, get you back to the person who's now handling our endowed funds for Emory College, because we're just doing the scholarship money right now. So let me refer you over to Susie Smith or somebody who's handling endowed funds. Or they could have said, would you like to come to our next Dean's Council meeting to hear about what is happening in the sociology department? You know, something else maybe at Emory College that would be related, but still the college, as opposed to these fundraisers who I think had goals to make each week of how many scholarship funds they could create each week.